Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 405 on December the 13th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on iRobot Corporation, USA Rare Earth, Pfizer, and Him and Hers Inc. And we discuss 4 new trades on Plug Power Inc., Richtech Robotics, Alcoa Corporation, and Barrick Mining Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the U.S. market spent the week anticipating and then digesting the quarter basis point reduction in the interest rate announced on Wednesday by the Federal Reserve Bank. The Dow Jones Industrial Average grew 503 points, closing at 48,458 points. The S&P 500 index lost 42 points, ending the week at 6,827 points. And now it's time for the topic of the week. The topic of the week is sandbagging your numbers. Have you ever found yourself sandbagging your own numbers? I went to an event this past week, and the speaker told everyone to write down their top 3 goals of 2026. I wrote down 3 goals that were specific, measurable, achievable, realistic, and time-bound. SMART goals, as they like to call it. The goals I wrote both excited me and inspired me. And then the speaker used a diagram to give us an idea of what they call the realm of possibility. He then drew a line from the center of the circle of the realm of possibility, and it extended well beyond the limits of the circle. Next, he pointed out that the intersection of the circle and the line that he drew represented the current limits of our mind. And as he continued explaining the illustration, I realized that I was sandbagging my numbers. Sandbagging just means holding back your best. There's any number of reasons why you would sandbag your numbers. Maybe I didn't want to seem whimsical or unrealistic. Or maybe I did not want the pain of missing the mark, missing my goal. Once I saw it with my own eyes, I wrote goals that were well outside of my current ability. I will have to grow over the next year to reach them, and that's exactly what I want. I bet that's what you want too. I'll leave us with a quote from Henry David Thoreau. It's actually one of my favorites of his, and I'm sure I've said it before on the podcast before, but it's the perfect time to say it again just before the new year. If you have built castles in the air, your work need not be lost. That is where they should be. Now put the foundations under them. I hope you're getting ready for an exciting 2026. This journey is about to get even more fun, so keep coming along with me. So let's go ahead and dive into the review of last week's trades. We're going to start off with the covered call on iRobot Corporation, symbol I as in India, R as in Romeo, B as in Bravo, T as in Tango. At the time, the stock was trading for $3.68 per share. I looked at buying that stock and selling the December 4 call at 45 cents. That could give us a 20.92% return in 2 weeks. Well, shares of iRobot grew 62 cents, ending the week at $4.30 per share. The call option that we sold is up 25 cents, leaving us with a net profit of 37 cents if we were to close the trade out immediately. And if you consider that your capital on this was like $3.68, right? Outbound, not counting what you received from the call option, 37 cents on 1 week of risk is more than 10% of a payout, so not bad. Now, of course, with the stock heading higher, we'll look to close this trade in 5 days. We want it to expire, hopefully, with the stock price above $4 per share, allowing us to capture the full profit at expiration in 5 days. So this trade is working out exactly as planned. No adjustments are needed. Next up, we have a cash secured put on USA Rare Earth, symbol U as in uniform, S as in Sierra, A as in Alpha, R as in Romeo. At the time, the stock was trading for $17.25 per share. I looked at selling the December 17 put at $1.45. That could give us a return of 8.23% in 2 weeks. Well, shares of USA Rare Earth lost 22 cents, ending the week at $17.03 per share. The out-of-the-money put that we sold is now at the money, but still out of the money. We definitely want the stock price to expire above $17 per share so that the put that we sold expires out of the money. Also, make sure you keep track of the break-even points. We are nearly $1.50 above the break-even point, even at this stock level. So this trade is still working out for us. No adjustments are needed just yet. You're welcome to close it out early if the math dictates that. But expiration is only 5 days away, so keep your fingers crossed and stay alert to the stock changes. We had a credit spread last week on Pfizer, symbol P as in Papa, F as in Foxtrot, E as in Echo. At the time, the stock was trading for $26.02 per share. I looked at selling the December 26, 25 half put spread at 19 cents. That could give us a maximum possible loss of 31 cents per spread. Well, shares of Pfizer lost 16 cents, ending the week at $25.86 per share. The out-of-the-money put spread that we sold is now at the money, meaning the stock price is between our two strikes. Now, we are 5 cents away from our break-even point, which means it's time to start considering our next move. I'm leaning towards waiting a couple days just to see if the stock heads higher again before the end of the week and continues the previous push higher. Now, whatever you decide, just make sure the math works out. Selling the iron condor, meaning selling that out-of-the-money call spread, will not gain me enough premium to make it worth the added risk if the market were to head higher this week. So remember, we're just 5 days away from expiration, so stay on top of the stock move and be well aware of how it's going to affect your position. If you create the iron condor too soon and the stock rallies, you end up having your original idea work, right? You end up making money on your original idea, but in fact, you lose money on the whole trade because you created that iron condor. So that's why I just say make sure the math works before you hedge any of these positions. And if you remember last week, I always warn with 2 weeks left until expiration, these trades inherently have more risk to them. So you just want to stay vigilant with 1 week left. Finally, last week, we had a debit spread on Him and Hers Inc., symbol H as in hotel, I as in India, M as in Mike, S as in Sierra. At the time, the stock was trading for $39.21 per share. I looked at buying the December 38 half 39 call spread for 31 cents. That could give us a maximum gain of 19 cents or a 61.29% return in 2 weeks. Well, shares of HIMS, HIMS, lost $2.02, ending the week at $37.19 per share. The in-the-money call spread that we bought is now way out of the money. The stock price is below our break-even point, which can justify the need to make an adjustment. So you can turn this debit spread into a credit spread, an out-of-the-money credit spread, by selling the 38 half, 39 half call spread at 24 cents. That will leave us with a 39 half credit spread on the call side. That will hopefully allow us to recoup some of our losses on the spread of the week. And just make sure you do the math. Once again, I know I've said that over and over again, but do the math so that you understand how your risk changed by making that adjustment. Now, there's only 1 week left, right? So you actually are adding to the risk when you do this trade because you will have paid 8 cents to enter the 39 half credit spread. Normally, we get paid for these credit spreads. Instead, you will actually be paying to sell the spread, but what you're really doing is paying to limit your loss on the week. So that also means that you're still open on the full spread value. So that's why I say you have to do the math just so that you understand what exactly you're doing. Now, understand that we're still hoping that this stock will move higher, but since it fell so much lower, it's definitely worth making an adjustment. That's it for last week's trades. We are 1 week away from December expiration, the final expiry of 2025. Can you believe this year is almost done? Seriously. Now, all new trades on today's show will use the January 16th expiration date for monthly options in January. We're going to start off with a covered call on Plug Power Inc., symbol P as in Papa, L as in Lima, U as in Uniform, G as in Golf. The stock ended the week at $2.32 per share. I'm looking at buying stock and selling the January 2.5 call at 22 cents, hoping for a return of 17.24% in 5 weeks. Now you enter this trade by buying stock for $2.32 per share and selling the January 2.5 call at 22 cents. This trade makes the most money if stock prices finish above $2.50 per share. The break-even price is $2.10 per share. In real terms, the stock purchase would require $232 and you'll collect $22 for selling the option. Next up, we have our cash secured put on Richtech Robotics Inc., symbol R as in Romeo, R as in Romeo. Stock ended the week at $4.11 per share. I'm looking at selling the January 4 put at 58 cents. That could give us a return of 14.5% in 5 weeks. Now you enter this trade by selling the January 4 put at 58 cents. This trade makes the most money if stock prices finish above $4 per share. The break-even price on this trade is $3.42 per share. In real terms, you'll collect $58 for selling the put option, and you'll have $400 locked up just in case you need to purchase the stock. Next, we have a credit spread on Alcoa Corporation, symbol A as in Alpha, A as in Alpha. Stock ended the week at $46.14 per share. I'm looking at selling the January 46.45 put spread at 37 cents. That could give us a maximum possible loss of 63 cents per spread. Now you enter this trade by selling the January 46 put at $2.42 and concurrently buying the January 45 put for $2.05. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $46 per share. The break-even price on this trade is $45.63 per share. In real terms, you'll receive $37 per spread that you sell and have $63 at risk. And our final trade on the week is going to be a debit spread on Barrick Mining Corporation, symbol B as in Bravo. The stock ended the week at $43.09 per share. I'm looking at buying the January 42.43 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that's a 53.85% return on capital in 5 weeks. Now you enter this trade by buying the January 42 call for $2.95 and concurrently selling the January 43 call at $2.30. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $43 per share. The break-even price on this trade is $42.65 per share. In real terms, you'll pay $65 to enter the spread, and your maximum gain is $35 per spread. So that's it for this week's show. Thank you guys so much for listening. Thank you guys for also sending me emails about the community. I'm going to open that bad boy up this week. I have all of the videos that I've made in one of the classrooms. I've been posting daily just to get ready for you guys. So this is going to be a fun community. If you'd like more information, one of the things I'm doing is this is going to be a paid community, but for people who listen to my show, you're going to get a 7-day free trial just to test it out and see if it's something that you like to get involved with. So shoot me an email at eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. So you can be one of the first ones in this week. All right. Have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.